G'day, thanks for watching. Thanks for subscribing to this series. We'll give it a run for 3 months, run us up to Christmas. And with a little bit of luck, we might actually nail a 40-week high. So what I've got on the screen here is an S&P 4-hour time frame with cats on it. I'm not going into the detail of how this came about. It was inadvertent and I've left it run. Now it's a demo account. One of the things that I bang on about is exit on error. Well, that applies to my real-time, real money trading. But I thought this might be instructive, so I've left it run. For those who are resubscribers, you will recall that this was probably, well, I don't know, maybe $300, $400, $500 less than what we're seeing at the moment. Of course, what we're seeing at the moment is open equity based on these open trades. So the balance over here is the closed equity. And if I was to close this account out, then not right now, close all of these trades, then the equity in the account would be as listed here, and that would appear as the balance. Anyway, look, we're not here for cats, but I thought it was something that we might keep a bit of an eye to. So we'll get rid of the terminal and get to the Dow. So because we're starting a new series of 5-minute videos without taking too much time, let's have a look at the monthly. So I bring some data in. This is an uptrend. My plan says be long in an uptrend. This is the weekly. Bring in some data. Now, of course, we've had a 6-year low. Which is this one here. If you think about cycle theory, one of the things that we know about cycles is that they're up for approximately 1/6 of the cycle, whether it's going to be a bullish cycle or a bearish cycle. Well, back in 2020, I think we had the 90-year low, COVID low, if you want to give it another name. Well, 1/6 of 90 years is 15 years, so I'm expecting this market to be up for 15 years, at least. And of course, no market goes vertical without retracements, and the retracements are the smaller cycles as we go along. So over here, I've got a 4.5-year, got a 6-year here. This is the 4th 18-month out of 2020, based on my phasing. And of course, you're going to get some down. But if you have reason to believe, like we do, that this is going to be an uptrend, then every retracement or every pullback is an opportunity to add long. Anyway, this is the daily. And we've been waiting for a 20-day low. And I was sort of expecting that it might have been last night's trading. But I'm not sure that we had a low. No, well, there's a possibility. Okay, this is right in the middle. It's an outside bar. Looks like it's poked its nose probably up above the previous all-time high. So the low might have come in across the weekend. Well, what we can do is snaffle a 20-day. Oops. Snaffle. Pop it there. And what we're going to do is have a look to see what the umbrellas look like down here. And I think they're going to look pretty much the same as what we're seeing here. Just update cycles. CycleMaster will give us a bozo arrow, a large arrow. It's also haloed because that's not fitting the definition of a down bar or a low. And look, smack dab right in the center. So that's sort of a bit believable. It could have been, the 20-day low could have been back here, but let's go with the center of the orb. That means there's a 6 on one side, there's a 7 on the other side, and although that's the 20-day, in the middle of the middle 40-day cycle, it's also a 9-week or 80-day. And interestingly, over here we have an 80-day FLD forecast. And that's probably retired, but it looks like that's going to be surpassed eventually. Okay, the other one that I wanted to look at is Bitcoin. And during the last set of 5-minute videos, the previous series, I was banging on about Bitcoin probably hesitating, possibly making some sort of a noticeable low. And of course, what Bitcoin was doing at that stage was pushing up. So let's bring in some data. And we've got a bit of a down bar. So the blue lines are my old forecast lines. These ones back here have never been shifted. So for those of you who've been tracking this for some time, you'll notice that I don't shift these blue lines. I use them for my own purposes in terms of learning. So I make the forecasts, and if they come to pass, well, okay, that's good. But if they don't come to pass, that's a learning opportunity for me. Believe it or not, I am still learning. I'm still trying to improve my forecasting. So here on the daily, looks like there's a bit of a down bar. Whoa, far too much excitement, Dennis. So in the last video of the last series, I said that we're coming into this 8-week low zone, and that in fact we might get some sort of a break to the downside. So let's just quickly do some FLD work on this. I don't want to waste your time, but it is an opportunity. So from this high, we can draw an FLD. So through, I'm looking at this center and I'm putting it, oh, well, it hasn't crossed yet. I'm anticipating a cross here. So next day it may cross. And then the next thing that I can do is anticipate a slightly different place where it might cross. So let's take it. Oh, let's be generous. Let's say it doesn't actually cross until way down here. Okay. So then we can insert rectangle, and we want to go from the bottom of that to the bottom of that. And that gives us a probability box. Now, the thing that's interesting is that this first forecast got hauled up by this FLD, which is a 228 day, which is the 8-month FLD. And this other one puts the probability box below that FLD, which means that we could go again, anticipating that the 8-month FLD could in fact be broken to the downside. And if that's the case, then that certainly would fit with my blue line forecast and probability box down here. Okay, thanks for watching.